Watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trade setup of the day. And of course, we'll be chatting with top market experts to guide you through the strategies of the day and the days to follow as well. We will first look at how we shut shop yesterday. Remember, after 2 days of a running correction, we've seen that the Nifty resumed its upward trend, reclaimed 24,300 mark. In fact, this was also led by the heavyweight counters like Reliance Industries that in fact logged in their biggest single day gain in the last 11 months or so. Apart from this, the defense stocks continued to rally in the kind of new geopolitical tensions that are emerging on the opportunities on that front. A lot of order flows also coming in from that amount as well. What we've also seen is that across the board, there were many heavyweights that contributed to the gains yesterday. It was a broad-based buying. The broader markets, mid and small caps also rallied in trade. PSU banks came up front. Even the commodity-based stocks like oil and gas also rallied in trade. And of course, many stocks were reacting to their earnings too. Apart from that, we will also be looking at how the overnight cues are from the US. S&P 500 ended about 0.06% higher, Nasdaq about 0.1% lower, while the Dow Jones Industrial Average ended about 0.2% higher. So a mixed trend on the overnight trading session. But remember, the Trump administration will now be talking about how things could be moving up on tariffs. There is a Reuters report that has mentioned that Trump administration could reduce the impact on auto tariffs. And this could be done by alleviating some duties that are placed on foreign parts. Domestically manufactured cars that use those products as well have been probably, budging the kind of move that they want Trump administration to really take. So that's something that we will be watching out for. There'll be a lot of macro data that will be coming in from the US as well, consumer confidence data, employment data, GDP numbers. That will be very important to watch out for as well. In Asian markets this morning, what we've seen is again a lackluster move. Australia's ASX 200 was up by 0.6%. What we've seen is South Korea's Kospi index was absolutely flat in trade. Markets in Japan, however, have been closed for a market holiday, and the gift Nifty trends are indicating up about 0.3%, and we could actually see an opening above 24,500 is what we are looking at. What we'll also see is how the foreign flows have shaped up. On Monday, again, we saw the FPI's purchase Indian stocks worth about 2,474 odd crores, while the DIS also bought about 2,817 odd crore rupees of shares. So both of DIS and FPIs have been buying in the Indian stock markets. In fact, for the foreign institutional investors, buying over the last few days have cumulative inflows reaching 32,467 crores in just the last 8 consecutive sessions. So that really shows a shift in the sentiments of the foreign investors towards India. We'll be talking a little bit more on that. And apart from that, of course, the fourth quarter earnings that will be in focus today. So many names will be coming out with their numbers today. BPCL, Ambuja Cements, Trent, Bajaj Finserv and Bajaj Finance will be coming out with their numbers. Bajaj Finance will also be in news because of the consideration of stock split bonus that could be coming in. IndiaMart Intermesh, then Jana Small Finance Bank, Vishal Mega Mart, PSB Bank will be reporting their numbers. So keep an eye out on all these numbers today. Apart from that, the numbers that have already come in will also see a reaction. So Central Bank of India will be in focus here. The net interest income was down 4%. Gross NPAs have seen an inch down. Net NPAs have also tad bit reduced. So there is an improvement on that front. Net profit improved by 28% for the company. And the provisions were also up by 19.3%. UCO Bank, what we've seen is that the net income was up by about 23% to 2,698 crores. Operating profit was up by 33% to 1,699 crores. Provisions improved by 40, provisions saw an uptick of 42% at 663 crores. And sequentially also, this was a jump of 12 odd percent. Gross NPAs and net NPAs have again seen an improvement on a sequential basis, and the net profit is up by about 24%. PNB Housing Finance, that's also in focus. The total income here improved by 13%. NII was up by nearly 17%. Net profit improved by 27.8% to 567 odd crore rupees for the company. K Fintech, that will be another one from the capital market story. The stock has been growing well over the last few days. We are seeing that the revenue was seen an improvement of 24% to 283 crores. EBITDA improved by 17%. Margins, however, came in tad lower, 43.4% versus 45.9%, even though the profitability improved up by about 15 odd percent for this one. Adani stocks will be in focus today. Adani Total Gas and Adani Green, both of them have reported their numbers. Sequentially, for Adani Total Gas on a consolidated basis, revenue just a tad uptick of 3.6%, EBITDA up 1%, margins came in lower at 19.9% versus 20.4%, and the net profit was improving by about 8.5% odd. Adani Green Energy on a YOY basis, what we've seen is that the revenue uptick was seen of 22% odd. EBITDA improved by 31%. Margins came in higher at 78.3%. So better set of numbers from Adani Green versus Adani Total Gas. Net profit also was up by about 24%. From the insurance basket, we are going to be keeping an eye out on Go Digit. The highlights show that the total income improved by 6% there. The net profit also came in at 116 crores. There's a sharp improvement on that versus last year's 52.7 odd crores rupees as well. AUM also improved by 25%. Combined ratio for 2025 is 111.3 compared to 108.8%. So that's something that we will keep an eye out on as well. Of course, today we will also be looking at how the things will shape up amongst the macros. Let's welcome our guest on board, Dharmesh Kant, Head of Equity Research at Chola Securities, is now joining in. Hi, Dharmesh ji, warm welcome. Good morning to you. Tell us, what do you make of the strong recovery that came in yesterday? Absence of any kind of developments on the geopolitical tensions, was that it? And do you think that we could continue with this onward recovery, or is there always an overhang of geopolitical tensions that can actually spoil the mood?
Yeah, good morning, Sakshi. I think, see, geopolitical tensions can actually spoil the mood because if you look at the earnings so far, that has been lackluster. There hasn't been any single blockbuster kind of earnings. More or less, it's a single digit kind of earnings growth for the year. And if you look at Q4, it's a bit single digit kind of a growth, barring a few, mid cap space where they have done pretty well. But otherwise, it's a very muted set of a number. So on backdrop of this muted economic, growth happening, and something disturbing on the geopolitical front comes time. And this time, I don't think if something happens, it would be a, just like a Uri or kind of a thing. It would be a more serious kind of an affair. So that can derail the economic activity in the present global setup. Good news is that, India is doing fairly well with US as far as bilateral trade negotiations are concerned, and understanding as to the road ahead. India may be one of the first country, as has been the official statement from the US itself, to get it through. So that is quite soothing. And I do think that the tensions between China and US is round the corner because US is making all the sounds and noises to have the talk in place, whereas Chinese government have denied them repeatedly. And they want some cuts to first come into play and then both have a bargaining power. It's more of a political game which is being played out there. But even that seems to be settling in the right course. So economic activities on the macro front looks to be getting for the better from the worst scenario. Though the better scenario is again not so better had it not been there. But anyways, you have already discounted the worst and you are moving ahead to the better future. So that is a silver lining. But yes, geopolitical issues are on. Even yesterday night there were some skirmishes happening on the border. If things continue like that, then upside is definitely capped to the market. At the same time, till it is clear, I think a range bound kind of an activity is expected on the market.
Okay, got that. Well, the gift Nifty started to trend. In fact, Nifty's started to trend in the pre-open, but opposed to Gift Nifty moved. Gift Nifty was indicative of a move above 24,500, but what the pre-open tick is at lower, about 0.6%, 142 points of a decline, but this should improve for the better. We will try to just have this pace out, and of course, we will look at it yet again. But let's talk about the key factors that led to the move yesterday and whether they can continue the move today also. Reliance Industries. The numbers came in better than estimates, at least on the profitability figure as well as some other pockets too. What's the sense that you have? I mean, 5% improvement, the biggest single day gain in the last 1 year or so. And do you think Reliance is out of those consolidative moves that it had been showing for last 1.5 years? Is it on course to achieve higher highs now?
Yeah, if you are willing to wait for it, I mean, if you are willing to spend some time in to Reliance Industries, then definitely yes. I mean, the numbers were okay. I mean, that was not a great numbers to my mind. But the direction of the numbers, specifically the segment wise, I mean, the geo platform, the way the numbers were panning out, and the expectation is the new energy business will start delivering by Q4 of FY26. So there, the visibility will also come. And if you look at, Sakshi, if you look at Reliance Industries 5 years back or 6 years back, I mean, Jio was the very low contributor to the operating segmental operating profit. Now it's the highest contributor. Same is
Correct.
expected from the new energy division, and the sum of the parts kind of a valuation will play is playing out for Reliance Industry. I mean, that's the only way to measure such a company. When the demerger will happen, the segmentation of the business into new companies will happen. That I mean, still we are 3 4 years away from that. But eventually, to our price target for Reliance Industry for long-term investor, I mean, at least a 3 year kind of a time horizon is around 2000 to 2100 as of now. But we'll see how the tailwinds of this new energy plays out. So we have been recommending to our clients to get it acclimated on a SIP kind of a basis. Yesterday was definitely a big move. We cannot expect that every day. But yeah, it's definitely a buy on every declines. And if you are ready to stay invested for a couple of years, then higher price targets are on the horizon.
Higher price targets are on the horizon. So that's as far as Reliance Industries is concerned. We'll keep an eye out on that. Apart from this, I also wanted to get a sense on the auto pack from you. We will get into the specifics of the key stocks that I want to discuss. But there is this thought and probably some news flow coming in from Reuters that suggests that there could be some easing out of the tariffs from the Trump administration on the auto pack. Now, we do remember that auto space was the first being hit with that 25% of a tariff until and unless that pause came into effect. If there is going to be a rethink and if there could be lower tariffs on that account, what is it that your approach will be on the auto pack, sir?
Sakshi, I mean, the Trump administration has no choice but to lower the tariff. I was surprised when they initially levied the tariff on the auto pack. The reason is very simple. China has been gaining very significantly and very rapid, strides into the auto industry, particularly through new technologies. I mean, software-driven vehicles are the concept nowadays, and SDVs, the type of SDVs which China is rolling out is far superior to the sleepy or laid back approaches by European car manufacturers or US car manufacturers. So they have a lot of catch up to do. I think this tariff was just to buy the time out so that they can gear up very fast. And if you talk to software developers for auto companies like say Tata Elxsi or KPIT or Tata Technologies, they are sounding the same sound bites. They are also suggesting people have woken up, they are gearing up to face the competition from these Chinese manufacturers. So it has to come. You cannot have both. I mean, you raise the tire prices at the same time. Your cars are not competent to the world standards, and then you expect the sales to trigger in. So it's not likely to happen. And it's not about the tariff on the entire car. The auto ancillary segment, which US is nowhere right now, everything is being imported as far as the parts are concerned from different countries. So tariffs are being levied on them as well. So you have to keep your cost in check. So it proved to be counter measure for the US. So they are trying to resort that. Good news for our country as far as auto ancillary manufacturers are concerned. We are not importing anything to the US except the Tata Motors, which has a JLR presence out there. But overall, net, I think this sounds good, and the prices have been beaten down quite, dramatically in most of the four-wheeler and two-wheeler space. So some recovery around the corner, definitely on the back of this news.
Okay, fair point. But, let's talk about specifics in the auto space also, sir. Yesterday, there was a big strategic move announcement by M&M to acquire SML Isuzu. that was being awaited. But I also want to understand the valuations at which they have got SML. What is your suggestion there? They've continued to believe that SML will continue to remain as a separate listed entity for now. The name Isuzu will go away, but they will retain both the product identities as well. They are mentioning at this point in time. Of course, M&M is eyeing a greater market share with SML's addition, and of course, they haven't been focusing on EV, so their EV basket grows with SML. But what about investors who've been holding SML Isuzu shares, and what should one do with M&M now? Those who have been eyeing M&M as a right opportunity to invest in.
See, for several investors, I mean, it's not late. They should have, exited early, but it's hard to know because till it is announced, you don't know what is going to happen. So post-announcement,
Correct.
we saw the price action. But M&M investors, I mean, they should stay invested in M&M because M&M is getting all the right things at the right time. So the timing of right from the Scorpio days when they introduced the first SUV, they have been getting all the model side, even the electric vehicles which they have launched are far superior, almost competent with any BYDs of the world. If you look at them, the features of the nine vehicle which they have launched are very superior to that. SML is a strategic investment where a product portfolio, gets more enhanced for M&M. So this was the segment, this SUV segment they were missing on. So they have added that as well. I think the way farm sector is behaving for M&M is like with better monsters place that is also likely to trigger quite well. Valuation wise is fairly valued, not cheap any longer. But if you compare this to say a Maruti, then it looks though it's not apple to apple comparison because the product profiles are totally different for M&M. It looks still a bit cheaper on a relative basis. So I think price action is likely to continue for M&M and the type of bookings they are getting for their SUV segment and the EVs, which they have launched recently, is telling you that this momentum is not likely to die down fast. A couple of years is still there for M&M. Some strategic businesses which they are still holding into M&M portfolio as a subsidiary, if they get rid of that, then I think it will be a very good pure play on the entire four-wheeler segment. So to sum it up, it's a good value buy which they have done. I mean, the valuations are at arm's length. There is no higher price has been paid for the acquisition. And SMS shareholders, I mean, open offer will come, so they should go a bid and get out of it.
Okay, got that. I hope this has helped all our viewers out to take the right decision on that front. Let me also bring in some other earnings for you to really help us on with your own viewpoints. Ultratech Cement came in towards the fag end of yesterday's session with the earnings there. Not too much of a dampener, but they're just seeing some nearby headwinds at this point in time. How would you look at Ultratech Cement, sir, post earnings?
Yes, cement as a space has been quite divergent. I mean, earnings. I mean, there has been marginal uptick in the blended realization, and some cost benefit has been there because input prices have not gone up. Volume is the deciding factor. I mean, volume growth, if you have reported good set of volume growth, but like ACC and all came out with a strong set of volume growth. So that is where things are being looked into. Dalmia Bharat, I mean, again, there was a miss on the volume growth. Ultratech overall, given the price at which it is trading, I think everything positive in the near term has been priced into it. So, given a choice, cement definitely will be a play because infra spending is likely to continue in the near term until at least a couple of months before the monsoon sets in. This activity is going to pick up. So, Q1 is likely to be better. Around 7 to 8% kind of a volume growth is expected, with 1 and 1.5% kind of a blended realization growth because 8 to 10 rupees per bag, most of the cement companies have taken a price hike. So there, I think, to my mind, Ambuja Cements stands the best bet. I mean, I would go with the Adani
Okay.
Group with Ambuja Cements
Okay.
rather than Ultratech at current valuations.
Okay, got that. So that's as far as the cement pack is concerned. On the NBFC space today, there are big earnings, sir. Bajaj Finance, Bajaj Finserv will be coming out with the numbers. We've been seeing the kind of rally that has been unfolded on Bajaj Finance. Today, of course, there will be this decision on the split price and bonus as well. What exactly would you expect, A, from the earnings, and what would you advise those who have been playing this rally of last 1.5 months on the stock, sir?
See, earnings are likely to be better only because they have given the advances number. There was pretty good, and AUM growth of around 30% plus is expected on this. So, no disappointment out there. And seeing the other NBFCs who have reported the earnings, I think Bajaj Finance would be the better off. I mean, the way they have been outperforming others into the same space, they are likely to continue to do so. Asset quality is one area where a keen eye would be there because Q3 also they came out with good set of quality, but there were some doubts as to the continuity of the same. So one factor which we would be watching out very carefully is the asset quality front on the Bajaj Finance. This corporate announcement, let it come through. I mean, that's already there in the price. The only worry for Bajaj Finance is very expensive, given the valuation multiple of more than 5 times price to book, with 20-25% kind of a PAT CAGR, looks to be on the higher end of the valuation multiple. So for traders, my suggestion would be to take profits. If you get a bounce on good earning announcement, take profits. And for investors who have already invested, stay invested. But for new investment, wait for a couple of months. I mean,
Okay.
this is not the right price to get a fresh entry into Bajaj Finance.
Not the right price to take a fresh entry on Bajaj Finance, but all the existing investors can definitely hold on. What about housing finance names? PNB Housing Finance came out with the numbers yesterday. Strong on all accounts, I think, and the pre-open trend is also indicating an opening above 7% higher. Vis-a-vis last, yesterday's move that we have seen. How would you look at PNB Housing? They have been consistent with their earnings performance, sir. What would you say now?
Yeah, I mean, green shoots are out for all the housing finance companies after a high interest rate
Yeah.
design. And most of these housing companies, cater to the affordable segment. PNB, LIC, Housing Finance, Catfin Homes, they are more into affordable category where the interest rate hurts the most. So EMIs has to be lower for them to gain traction, and that cycle has turned in favor of them. And at the same time, the earlier, loans which they have given, asset quality deterioration was not seen in any of them. So the stable asset quality, and I think they have got this equation right as far as giving loans to people are concerned, not like DHFL and all, where, just to get more business, many discrepancies were made. So these companies have not done that. My own sense is this is one segment which we should be looking forward to for 1 year kind of investment perspective, where interest rates will continue to come down. At the same time, there would be ease in the inflation. Plus, if better monsoons are there, business activity is definitely likely to pick up. Our check with most of the real estate developers also suggests that affordable segment is picking up now. So PNB, LIC, Canfin, if you play with them as a basket buy, would be a better way to go into as an investment in this category.
Okay, got that. Hopefully, this will also help all of our viewers really take that decision in the housing finance names right there. Apart from this, one more space that I wanted to discuss with you is IT again. And how are you really looking at a fresh? Most of the big heavyweight earnings are now out of the way. Some of the mid-cap IT names have also come out with the numbers. There has been some improvement in the way stock prices are moving on the IT pack. Was it just peak pessimism that we have seen that is now turning into a recovery for the IT pack? Do you think the worst is priced in? Most of the earnings are not very exuberant, but at least for some of them, it's not all bad when it comes to the outlook, at this point in time. How would you look at the IT pack, sir?
See, you have to be very, very, stock specific in the IT pack. I mean, 5-6% is the PAT growth which they have come out for the entire year. And for the quarter, it was 2% all put together, mid cap, small cap, if you look at the aggregate basis. So that's the story out there. Even if it is 8-9% or even 10%, what is the price you are paying? For large cap IT companies, you are paying around about 20, 15 to 20 times PE multiple, where the growth cannot be more than 10%. For mid and small cap, you are paying in excess of 20-25 times of PE multiple. So I think people have to come out of their mindset with the way, 10 years back IT companies used to behave. For last 2-3 years, it has been very difficult for them to gain business. And I don't think the cloud is still, over for them. It's still there. I mean, whatever is the tariff rate, it's going to dampen. Hearing most of the con call, we did hear that there was ram down as well. Forget about discretionary spending, getting up. There were few deals which are about to get closed. It did not happen. And
Yeah.
some was almost closed. The customers rolled back. So that concern is there. Having said that, you still have few players. I mean, where ER&D kind of a company which is there,
Yeah.
like KPIT Technology came out with a stellar set of numbers yesterday,
Yes.
and the geographies like Asia has done pretty well, and they are sitting on a large pipeline with the European counterpart. And as we
Yes.
discussed earlier, because things are picking up in US and Europe, so all those verticals start delivering in, it will give you a very good set of numbers. So these are
Sure.
companies where one should be investing into.
Markets have opened. Let's shift focus. It's a green open for the Nifty. 24,382 is what you see, but a tad bit lower than what Gift Nifty was indicating, 0.2% higher in trade. The mid caps are soaring higher. You can see about a 0.6% of an uptick on that one. The Nifty Bank also about half what percent uptick can be seen on this as well. Small caps are even higher, 0.9% of an uptick on this one. IT space that we were just discussing with Dharmeshji, also about half what percent of an uptick can still be seen on the Nifty IT at this point in time. In fact, there's a large trade on Tata Technologies that's taking place. About 1.79 crore shares have exchanged hands, and you can actually see Tata Tech lower by about 4.7 odd percent in trades today. That's the reaction, early reaction that we are getting because of that block deal. Of course, some details will follow suit. But on the sectoral front, large part of the sectors are still positive. CPSE index is positive. Capital goods is positive. Autos, PSU banks, financials, the Nifty metals index, even FMCG for that matter is up and about in trade. Pharma, realty, all of them are opening with gains. So it looks like a broad-based buying that is taking place right at the opens, of the session as well in trades today. Let's look at the top Nifty gainers. You have IndusInd Bank that's 1.6% up. BEL that continues with its move yesterday, about 1.4% higher. Tata Motors is up in trade. You also have L&T that's about 1% up, and Wipro also about 1% higher. So IT names and auto names also definitely supporting. On the downside, Sun Pharma after yesterday's move is giving up some of those gains, is among the top losers today. You also have Grasim, Cipla, Ultratech Cement post earnings that continues to show some kind of a weakness. Bajaj Finance is also slightly lower ahead of the numbers, but only about 5-6 stocks that are down in trade. The market breadth remains positive, and you can also see about 40 to 43 or 44 stocks now higher in trade as far as the Nifty is concerned as well. Let's in fact welcome our guest on board. We have now Prashant Tapsi joining in, Senior Vice President of Research Analyst at Meta Equities. Hi Prashant, morning to you. Good morning, and hope you're doing very well. Tell us how you spot the opening today for the markets on anticipated lines.
Good morning, Sakshi and the other colleagues. Overall, I think markets are in a very different positive zone. Globally, markets are supporting, and even microeconomic factors like all the IIP data and all, they are also supporting Indian markets, and as well as the earnings are also better than expected in all the factors, all the sectors which we are seeing right now. So overall, I think technically also things are in a better shape. 24,520 can be a next resistance for the market. I think today or tomorrow that resistance can also be breached out. But overall, my target would be anywhere between 24,800 for the month of May. So that can be a good positive momentum for the markets. Overall, I think Q4 earnings are coming up with a better than expected numbers. Plus, I think global markets are very supportive, and even Trump is giving some kind of positive sentimental headlines with respect to auto stocks and pharma as well. So I think things are going very positive, and we will be trading on a very positive note.
Okay. Let's focus back on Tata Technologies, the large deal there. Like I said, 1.6 crore shares have exchanged hands. That's 3.95% of equity, worth about 1,094 odd crore rupees has exchanged hands at the rate of 683. Right now, the stock is hovering at 670 odd levels. Let's get Dharmeshji on board. Dharmeshji, you were talking about the IT space and the mid-cap IT names as well. What about Tata Tech that has been a true laggard of sorts post the IPO?
Yeah.
Absolute lackluster names, but a lot of retail investors got into it thinking that an IPO is coming from the Tata fold after so many decades, and therefore one should really bet big on this earnings and of course that huge deal impact.
See, earnings was, I mean, okay types, nothing great about the earnings, but the commentary which followed that was encouraging. I mean, they are expecting this quarter as well to be a bit slow, but things after 3, 4 months, I mean, Q2 onwards should start picking up. And what happens with the auto industry is if a new model is getting launched, so 2 years back, the entire preparation starts for that launch of the model, and that is where companies like Tata Technology, Tata Elxsi, and KPIT Technology comes into play. So that business is likely to flow in. What they are suggesting is, as of now, though the deals are being, inked, but the flow, execution flow is still getting awaited because of the tariff thing happening in the US, and some, because it is unsettling the entire European and US market, so they are unable to get in. Unfortunately, most of these companies have the business, major chunk of the business coming from these two geographies. So that one has to wait out. My only, suggestion would be, if you have already invested into Tata Technologies, be invested. If you have not and you want to have a space of this R&D space from the auto mobility segment, then Tata Technologies is a nice company to get into. You need to have a patience for 1 year. I mean, from H2 of FY26, things should start recovering for them. And then these valuations will look very cheap. We do have a initiating coverage on this company, and our price target is 1400 from 2 years time frame perspective.
Okay, got that. The one number that I want to also discuss with first, Prashant, can you also give your outlook on Tata Tech so that we can move on?
I think yes, I agree with Dharmesh ji again. With respect to the business model, it is totally exposed to all the global markets. That is the only one risk which Tata Technology is facing right now. Once these global risks phases out, I think again H2, as Dharmesh ji said, I think that would be a wait and watch for me for 1 or 2 quarters. Then only if things improve, I am very much positive on the stock. But overall, I think a 900, 950 can be a target for from 12 months holding from current levels.
Okay, fair point. Let's look at the other stock that is reacting on the earnings. RPG Life Sciences is something that I wanted to discuss. Here the Q4 profit surged by 786% viewers. Although this was on a one-time gain, the company has also announced a final dividend of 20 rupees per share. This pharmaceutical company's profit for this similar period stood at only just about 13 crores last year, same quarter, and now it surged to 117 crores. A huge bump up there, and that's why you're seeing the stock price react so. Revenue from the operations, went up by about 13 odd percent. EBITDA was also up by 115%. Exceptionally high profits was also, like I said, a one-time gain of 109 crore rupees was seen from the company. This was attributed to the assignment of surplus vacant leasehold land in Mumbai, Navi Mumbai, that the company has really seen, and that's the reaction that we are going to be looking at. But we'll take one quick reaction from Dharmesh on this. Have you been tracking this stock closely, and what do you foresee?
I'm very sorry, I have not tracked this stock for the last couple of years, so difficult for me to comment on it.
Prashant, how about you?
I think yes. If you see the numbers, they are not so good. I think only the one-time benefit, which is been reported this Q4 numbers. So that is the only reason why the stock is trading on a very positive note. But overall, the numbers are really neutral to negative for me. So if anybody has bought the stock, I think it should be a opportunity for him to book the profit and exit the stock right now.
Okay, fair point. So it was important to get that clarification down for all our viewers to really see that just don't see at the prima facie level that 786% move, but it's also because of the one-time gain. And Prashant believes it's an opportunity for you to book profits in case you're stuck at higher levels. Then please look at a search and then look at an opportunity to exit the stock at this point in time as well. Let's look at some of the other aspects in the markets. The banking space and the housing finance names that we have been discussing, a lot of buzz around the banking and the finance names, PSU banks, all of them are again looking up at this point in time. Prashant, what's your view on the banks, financial services names?
Very positive. Post RBI been supporting the sector with respect to the liquidity push with interest rate cut, as well as the open market operation, that is giving lot of room for a bank or NBFC to get lot of credit growth going forward. So Q1 earnings will be better than Q4. So that is my assumption. I'm very much positive on the PSU banks. In the PSU bank, I still believe SBI has a great room to touch its all-time high, which is near 970. So one pick would be again SBI from the current levels, and PSU banks looks very good at this point of time.
Okay, Dharmeshi, when we are talking about the banks and the NBFC space, I wanted to discuss with you Shriram Finance. 2 to 3 days we've been seeing the decline. Today there is a slight recovery. Post the earnings, there was some disappointment. How would you look at Shriram Finance now, sir?
See, earnings was, muted, but the commentary which followed after that, where they have been guiding for 15-16% kind of a growth. So in the same space, you are having companies which are, guiding for more than 25% kind of a growth, and they have been delivering that. So that's a bottleneck. I agree that valuation-wise, there's a huge, gap as well. The valuation multiple, they are quoting at 2 times price to book, where others are 4.5 to 5 times price to book. So people at this, juncture are looking at growth opportunities in the market, and that is where Shriram Finance has disappointed to a bit, and even the forward guidance doesn't look that aggressive. So I think it's a safer play. You can, if you are buying at current levels, there's nothing to lose out here. Margin of safety is quite high, and the gains would also be a bit limited. But and it has moved quite a bit. It has been a laggard for last 10, 12 years, and last 1 year since its inclusion into the index, there has been a sharp run up. But now I think it will go into a rest mode or a consolidation phase. Look out for other options in the same space where a better growth opportunity is there.
Okay, fair point. Dharmeshji, before I go to Prashant now to discuss some more aspects, I wanted to also discuss with you before we let you go on the way FPI stance has changed in the Indian markets over the last 8 odd sessions. We've seen a cumulative purchase of over 32,000 crores. Is this shift for good? What do you think is fueling this move back again into the Indian markets? If it continues, what should investor strategy be now reading into this fresh wave of liquidity that's coming in from the foreign money?
I think the size is not that great. 35,000 odd crores or 40,000 odd crores is like a hot money, just having a tactical buying move happening into the place. And at the same time, if it looks, you feel good when it's coming in. But we have seen when it goes out, what kind of a damage it does. So a stickier FI flows is more, required rather than hot money coming in and out. So that's a problem. Yeah, to my mind, this is more of a tactical pre-positioning kind of a play for a couple of months. So don't read much into it. Rather, domestic investors who have been putting money and believing in the economic growth story of our country, they are more stable and stickier flow. So any increase out there would be a good news for the market.
Okay, fair point. I hope this has also helped all our viewers really understand what is the way forward. Thank you so much, Dharmeshji,
Thank
for
you.
being with us in the morning edition and helping us out through all the strategies that you've shared. Prashant, we'll continue the discussion with you. Also wanted to get a sense on some of the other aspects that are going beyond we were discussing banks, finance. What's your position on the IT space right now? A lot of people are just wondering. There was a peak pessimism pre-earnings, and now post the earnings, the stock prices have started to move. So, what ideally should be the strategy there? Today, also about a 0.3% of an uptick can be seen on IT.
I think worst is behind us. The way we have seen the Trump action in last 2-3 months, that would be not be the same case going forward. So for me, downside is already limited, and even the index is giving some kind of positive sentiment with respect to the technical levels. 20 DMI, it has already crossed 20 DMI, and it is trying to touch 50 DMI at the current levels. So overall, I am very much positive. Even the earnings were very much muted. I feel the first quarter of this financial year and second quarter of this financial year will be better than the last H2 of last financial year. So giving that as a sense, I think very positive on that. And with respect to sectors, again, I think large cap should be one focused IT stocks like Infosys and TCS. These two stocks should be highly focused. I think these two can give a better deal for the IT sector. So overall, Trump may be in a very neutral way to give some kind of benefits to Indian markets. IT, pharma, and auto. These three sectors will be highly focused, and I think that will be very beneficial for Indian markets. So overall, IT very positive on this topic.
Okay, fair point. We'll keep an eye out on that too. But something that we were discussing with Dharmeshji before you had joined was the auto space as well, Prashant. And I wanted your view also on that. The auto space is again coming back in focus. There is some expectation that there could be a softer stance from Trump administration on the auto tariffs that they had initially planned. Now, in case there is a softer stance, which are the stocks that would likely benefit? Will it be the auto part makers completely, like Samvardhan Motherson for that instance, maybe the battery makers as well? How should one really view this vis-a-vis the large cap OEM players of autos?
I think versus OEM versus auto ancillaries, I would be preferring more on the auto ancillary business right now, because that was the risk what industry was seeing from the Trump tariff height attack. So I think that would be very positive for the Motherson Sumi and other Sonacom again and the second stock which also will be positive, very positive for the sector. But again, OEM will also be benefited like Tata Motors. I think it is spread across the world, the business, the China, German, US, and also I think Tata Motors will also be a better alternative for a auto sector to play with. It's a proxy for the global auto industry. So I think Tata Motors and Motherson Sumi, these two stocks will be highly focused in the auto sector.
Okay, got that. So that's how auto ancillaries could be really looked at. Remember, automakers have anticipated this relief from auto tariffs ahead of Donald Trump's visit to Michigan, which is home to major automakers and suppliers. And what we had seen is that last week, a coalition of the US auto industry group had urged Donald Trump not to impose that 25% tariff on imported auto parts, warning of a potential negative impact on the vehicle sales and prices, even for the US auto companies at large as well. Remember earlier, Trump had announced plans to implement this 25% tariffs by May 3, but that probably could be seen as a reversal, and some kind of an easing could now be seen on that. And now we could see that a softer stance could be taken, and therefore auto part names could be in focus in today's trading session as well. Let's look at some of the other pockets also in the markets beyond the auto, IT, and banking stories as well that we have been discussing. Defense names is something that I wanted to bring out for you. Yesterday, there was a very strong rally across the board. Shipbuilders, GRSE, Mazagon, Cochin rallied pretty sharply. HAL, BEL, of course, they continue with the move even today. The kind of move that we've been seeing. Even today, index is up by about 2.3%. It has been carrying on. Let's look at the Nifty Defense Index over the last 1 month. You will actually see an uptick on the index itself, and that's largely been led by all of these stocks cumulatively. Prashant, we have seen that how everybody had hopped on to the defense bandwagon much later, and then many of the retail investors felt stuck because the stocks went into a long 5 months of a consolidative period. Many of them corrected 40-50% from those highs as well, and therefore the confidence of investors was shaken. Now when finally things are again on the move, is it an opportunity for those who were stuck to exit, or is it indicative of what could come in after a consolidative period that yet once again we could see an upward rally on this space?
So investors who are stuck, I think it will take some more time to come out with the profits. But as a defense as a sector, I think it's a portfolio sector. One should have it in your portfolio for a long-term investment. Short-term, there will be some kind of volatility. The LOC issue, what is going on in between India and Pakistan, is just a 3-4 days old. So before that, also the sector was very much undervalued. So overall, for me, valuation is very much comfortable at this point of time. Even government has lot of focus to increase their spending on the defense post this LOC issue. So I think the way how they are spending 64,000 crores for Rafale deal, I think India will increase lot of make in India, and lot of orders will be flown to the domestic institutions like HAL, BDL, and other private and PSU defense stocks. So I think for an investor, he should hold it for a long term. Short term, there may be some kind of uptick due to the hype of the LOC issues. But overall, for me, defense should be a portfolio stock, but as a long-term investor.
As a long-term investor, that's something that you should definitely keep an eye out on. Okay, once again, I would like to draw your attention to PNB Housing Finance. I know that we have discussed a lot on the banking and the finance names, but the numbers that have come in for PNB Housing Finance, that have really pulled up the stock now to over 9%. A very strong surge, now 10% higher at 1,084 that can be seen. Now, what we have seen is that there have been consistent improvement in the numbers for the company for the last 3 or 4 quarters. They've ended the year on a strong note as well. For PNB Housing Finance, how things are improving for the overall industry as well, like with the liquidity measures you pointed out that are increasing as well. What would you really say for PNB Housing? Can one still step in at these levels?
Yes, very positive on the PNB Housing as well as Bajaj Housing Finance. But let's talk on the housing sector. I think from next 2 years, I think housing sector will have a lot of growth due to the cut in the interest rates. Very comfortable for investors to buy a home right now at 7 to 7.5% interest rates. Plus, there is a lot of liquidity push from the RBI, which is giving banks a good room for growing their credit growth. So I'm very much positive on the housing finance. Plus, banking like PNB Bank, PNB Housing, as well as Bajaj Finance. If you see valuations, PNB is still looking at a very 15 P and price to book value of below 2x. So, but again, if you see the highest, fastest growth stock in the sector, Bajaj Housing Finance also looks good. If PNB Housing is giving such kind of growth numbers, so I think it will be one should watch Bajaj Housing Finance also, which has a lot of technical triggers right now, which can give another 10% movement from the current levels.
Okay, got that. We'll definitely keep that in focus as well. Let's focus on some of the other aspects. PNB Housing definitely going very, very strong on volumes, now 10% higher. We'll keep an eye out on that. Now, let's focus on the capital markets related stories. Again, a strong momentum. KFinTech came out with the numbers yesterday. How did you find that? Because in the run up to the earnings, also the stock had been moving up. So, what post the earnings would you expect there? BSE has been consistently moving higher. And, I think from, a low of, around 4,800 odds, we have seen a sharp improvement, on BSE as well. 3.5% higher. Now 6,700 can be seen on Bombay Stock Exchange. Along with this, CAMS is moving up. We see even Angel One, 361 WAM. The entire capital market story is once again proving itself when the markets are riding higher. Your top choices from this space, and where can you invest even today?
I think Motilal Oswal would be a stock one should focus more on. There was some kind of balance sheet adjustment as well as PNL adjustment, which has driven the stock to come down drastically. So there is good room for Motilal Oswal to have a good run up for next short term. But overall, CDSL, KFinTech as well as CAMS, they have already moved well. Even BSE has been very much moving very faster and moving towards 7,000 as my target. So overall, very positive on the sector right now, because it's these are the stocks which are proxy for Indian capital markets, and they are been very much in a positive mood. So last 15-20 days, markets have been seen very positive mood, and I think investors' mood has turned to be very positive right now. The way we were seeing in February and March, there were a lot of hurdles with respect to the global markets as well as the domestic markets, and now I think overall things are in a better shape, and I think the capital market stocks are doing very good right now. So Motilal Oswal would be the one stock which I would focus more on.
Motilal Oswal will be your top choice there, since most of the other stocks have already moved up. That gives you a better risk reward at this stage in time in case you're looking at the capital market story to unfold. One more space that we will discuss is the real estate pack. Today, Oberoi Realty is something that we should mark on the downside. The earnings have not been very good. I think there's a sharp decline on the profitability figure as well. But overall on the real estate pack, and that's why you see a 2.5% of a dip on that one. We were discussing the housing finance names. They are doing strong. PNB Housing is doing well. GIC Housing, LIC Housing Finance, Bajaj Housing, all of them are up and about. But the real estate pack that their business really depends on is something that we should focus on as well. So Oberoi Realty now down by 2.2%. We've seen Macrotech come out with the earnings as well. What's really looking positive here on the overall real estate pack? Where do you think could be positive moves can be seen?
I think the Q4 earnings are giving some kind of mix and action in terms of Lodha developers as well as Oberoi as well as Godrej. So I think this is a great opportunity. If there is a good downtick in this sector, one should try to accumulate these stocks as at least for 6 months to 12 months, because I think the reducing of interest rates, which will help these companies to do well in the next 6 months to 12 months. So for me, Godrej Property would be a preferred pick for at least with the target of 2,400 from the current levels, because of the fundamentals strong as well as corporate governance have been very much in a positive way. So overall, the near-term outlook would be volatile, but again, 6 months to 12 months, I think Godrej Properties or the real estate stocks will do very well.
Okay, so that's as far as the expectation on the real estate sector goes at this point in time. Let's actually look at the markets for some stocks now. We will be looking at the broader markets now. We've been focusing on the Nifty names. Of course, across the board, we are seeing some move, even on the mid and the small caps. Small caps now up over 1%. So let's look at the small cap names. PNB Housing is, of course, leading that. You also have data patterns that's moving up. Anant Raj again from the real estate pack that's moving up. GRSE continues its upward move now at 1831. Sona Software, Atul, Delivery, BEML, R Power, MCX. These are all the names that are buzzing in the Nifty small cap 100 index. Let's also pull up the mid cap 100 names to see what's buzzing here. You have Bandhan Bank that's moving up, Mazicon Dock Shipyard from the shipbuilder space, BTL from the defense pack again, DSC we've discussed, Cochin also up by 3%. Sona Comstar is up and about in trade. Then NTPC Green, Solar Industries, that's also buzzing. Suzlon is buzzing in trade. You also have new age names like Nika, etc. That's buzzing. Let's discuss the renewable energy basket. Prashant, have you been looking at the fresh moves on Suzlon, for instance, over the last couple of weeks? Inox Green, for that matter, SW Solar, a lot of these spaces again coming in with a fresh move. Do you think there is an opportunity for investors in the renewable energy basket?
Yes, again, Suzlon is my favorite pick again. I think the stock is consolidating from the long term, almost 55 to 58. So I think 62 would be a breakout level for Suzlon, where if it closes above 62 in this weekend, I think we can have a good target of 75, 78 in a very short period of time. So overall, with respect to renewable energy, very positive. I think earnings are coming out with very better than street estimations. Even Suzlon, I think Q3 earnings were really great, but due to the market volatility, the stock did not perform well. I think with current market positive optimisms, I think Suzlon, if they deliver the similar kind of return results as they were delivered in Q3, the stock may even rally towards 70, 75 very soon. So in this pack, Suzlon is my favorite pick again. Second, IREDA would be a second stock one should have in their portfolio. So I think IREDA can also be a better pick. Already the results have been announced; they were really good. But I think another 1 or 2 quarters, the stock can do really well. And my target would be around 200 to 220 for next 6 months.
Okay, got that. So that's as far as the renewable energy names are concerned and how the stock is moving on that front and the top choices that Prashant has really shared. We already are nearing the first 25 minutes of a move on the trade that we are expecting today. Anything else that strikes your attention that I've not asked you, Prashant? Any key sector or stock that's showing a considerable amount of move and that warrants attention?
I think you already covered defense and the banking space. That was the most highlighted sectors in the current market. So I think even the telecom company is doing good. I think Bharti Airtel is sustaining very strong right now. I have a very strong view on the Bharti Airtel with a target of at least 2,000 from the at least 1 or 2 quarters. I think the way they have increased their ARPU going forward, I think that will also again continue to remain same about 250 rupees. So I think that will bring Bharti Airtel very strong content to have a 2,000 rupees as a target.
Okay, a fair point. I hope this also helps you out in understanding the overall view in the markets. Again, coming back to some of the names that we can spot for our viewers to understand. Again, from the broader markets, let me pull up some stocks. I think a 0.5% uptick can be seen on the Nifty 500 names. So that's the broadest index. Let's see where are we seeing some considerable amount of moves on that front. You have stocks like Data Patterns completely moving higher. Sonata Software, Whirlpool is moving up. Avas Finances, Intellect Design, DB Realty, India Cements is moving up. TBO Tech, that's another one that's moving in trade. Atul Limited. Then you also have names like Craftsman Automation. That's moving in trade. Most of these sectors we have covered. NTPC Green, again from the renewable energy basket that we just discussed, that's also moving in trades right now. SBI Cards is another one. Let's discuss this one. SBI Cards, Prashant, how have you read through the numbers and what next for this one?
I think the numbers were really below street estimations. There was some kind of pressure in the profit margin as well as the NPA in the stock. But overall, very positive on the SBI card. In the last show also we discussed about SBI card with respect to the consumption story. We feel the consumption story will have a lot of show in the SBI card as well. So if anybody who is spending a lot, I think everybody is using card as a route to use and spend. So I think for me on a valuation side, very comfortable to have a fresh position at this point of time with a target of at least 950 and 1,000 rupees for next 6 months. So overall, the card business is growing faster and faster, and I think it's the only stock which is listed in the index right now.
Okay, the Nifty has slipped into the red now, 24,306. We are seeing some dip from the highs of the day already in the first half an hour of trade. We are now seeing the early gains being given up by the Nifty. It's turned flat with a negative bias at this point in time. Let's look at the key contributors on the Nifty. Remember, yesterday the markets were also up because Reliance was really supportive. Today also it's up and supporting about 17 odd points of gains. But what's pulling down is in fact HDFC Bank, Bajaj Finance, Sun Pharma, ITC, Infosys, Ultratech Cement. Some of the heavyweight counters are actually contributing to this dip on the Nifty right now. So we can also see the Nifty lower. Even the Nifty Bank is giving up some of those gains from the higher levels as well. So across the board, we are seeing some dip now coming in. Prashant, how would you read into this fresh dip?
I think that would be only because of the profit booking attempt. We have a very short week this time. Thursday we have a holiday. Tomorrow is the last day. So again, so I think that would be the one reason why markets are trying to have some kind of profit booking attempt in the current markets. And again, weekend there may be some kind of tensions with respect to the LOC. Some action can be taken from the government of India. So market will be going through a profit booking session tomorrow as well as on the Friday. So my advice would be again, profit booking should be the strategy right now for this weekend.
Okay, fair point. Thank you so much, then Prashant. We'll leave you at that for being with us on the show and helping all our viewers out with your perspective on the markets and various pockets that we have discussed. First half an hour out and the rest of the day remains. Viewers, we'll continue to get you the market discussion with top market masters. Earnings conversations will also follow many of the earnings that are coming in. You'll see the managements on the channel as well. And we will, of course, keep you posted with what's really passing on the D Street, what should be the strategy there. So keep an eye out on all the developments with us on Business Today Television. 12 noon is when you will get all your questions answered on your stock-specific queries. With daily calls, I'll be back at 12 noon as well. Many thanks for tuning in. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special conversation. Our focus will be on DCB Bank's earnings. The bank has posted a 13.7% year-on-year growth in the profitability figure in Q4.